Hello and welcome back. My name is Curtis Storr with Family Investor. I'm one of the trainers. And before we get into today's basic topic, which is insurance, I want to congratulate you on passing the halfway point of the basic trainings. And if you have done this in less than 10 days, you're really showing your commitment to your future. The insurance types I will cover in today's training are the ones that are the most important to the advanced strategies. And we will, in the advanced strategies, obviously, that's where we get into teaching you about building the wealth and protecting it. Like I said earlier, today's topic is going to be on insurance. Let's get right into that. First of all, insurance types. As I said earlier, there's a link here to Wikipedia that shows you the types of insurance. And it will blow you away how many different types of insurance there are out there, including a zombie fund. And also, as a little disclaimer, I am not a home and auto insurance agent, which both are required to cover, and we'll cover strategies on them. The disclaimer is I have acquired my life and health insurance license because it was the only way I could get all of the facts. There are a few agents out there, even my own, the one that sold me a policy, that would teach me what all the pros and cons are to the different life insurance policies. So I went out and got my license to bypass them. And my commitment has been to keep it active for a couple of years. I have one more year left because I've been doing this for a year now, training on the life insurance information. And once my license is up for renewal, I'm actually going to let it expire. And the reason for that is my goal is just to provide you with the best information and guidance so you can make a better decision and not sell you an insurance policy. I hope you understand that already from the get-go, that this is about providing you with your options. Get right into it. Home insurance. Obviously, you'll see these here, these little icons with other names next to it, like Real Estate Basics. That's just to show you that we will do more training, so you have a reference point under this category, the Real Estate Basics. And if you want to jump to that, which I don't recommend, that's where you would go. Just like your car, we cover that in DD, which stands for Deep Dive, which you should know is your next level or second level of family investor trainings. And we go a little bit deeper into personal insurance. But these are the most typical types of insurance that everybody is aware of. If you own a home, you have homeowners insurance. If you rent, you have renter's insurance. Actually, there's other insurances that when you buy a home, you're not even aware that you get it sometimes, as a title insurance. Some people have mortgage insurance and PMI insurance. And basic information on PMI is it's a principal mortgage insurance that if you put less than 20% down, the lender or the bank who's giving you the mortgage on that property requires that you have it. And it's to insure them against loss. You're paying for insurance to insure them against loss. Just like your car. When you buy a brand new car, you have to get full coverage. It's required because you have unless you pay cash. It's required because you have a loan on the asset, the car. And if you were to get in an accident and destroy that asset, then the lender doesn't have anything they can sell if you default on payments. Because, if you get in a huge accident, you'll probably stop making payments on that car, and they could lose money. So you're required to get full coverage because they're insuring against loss. All these banks do this, and that's why these trainings, we're going to teach you how to be a banker like they are. That's what they are. Minimum coverage is only something you can get once you have paid off the car. And in one of the advanced trainings, we're going to go over, which is in deep dive personal insurance, is self-insured. How do you become self-insured? It's a great strategy, and I'm excited. But let's stick to the basic training here so we can get through this. Health insurance or medical insurance is probably one of the most important insurances that you can own. Because if you were to get sick, I went without insurance, health insurance for 5 years, but I'm pretty healthy. So I was lucky that I didn't need it. But if I would have needed, if I came down with needed surgery or something like that, or broke some bones or something, and I needed my medical insurance, I would have driven myself into debt. But I really didn't. I thought I was being smart by not paying it. Pretty crazy, but we get into that. And there's different types of insurance, and I provide you with links also, like the indemnity plan. We go into that a little bit. Health maintenance organizations, preferred provider organizations. You hear them as HMO and PPO. And there's another one you don't hear a lot about, is a POS, point of service. And some of us know about Medicaid. You hear about it. Some of us know about it quite a bit. And everybody knows about Obamacare. And that's the Affordable Care Act, ACA. And then there's Medicare, an insurance you pay for little by little out of your paycheck. And we'll go into the deep dive on Social Security and Medicare. We'll talk a lot more about that. And then, of course, there's supplemental health insurance. You can buy from other companies different supplemental insurances, and we'll let you know. We'll go over which ones you should have and which ones that aren't really necessary, and at what point does that change and stuff. Because as you become wealthier, there's the self-insurance. You won't have to worry about insuring yourself on certain levels, because if you have passive income that's bringing in $10,000 a month, you don't have to worry about disability insurance as much as if you're working as an employee for a company that's paying you $10,000 a month and you become disabled. Another insurance type, deposit insurance, which is called FDIC. You hear about it, and they advertise it at all the banks because it's an insurance that the bank won't lose your money. And it's actually a corporation that insures the deposits you make in the United States banks to prevent failure. And it's happened. The loans and savings back, some of you may not know this, but you could Google it, but the loans and savings banks all collapsed. And so back in the Depression, there was also another collapse. And so they created the FDIC to make people feel comfortable in putting their money into banks. So they had to build confidence and encourage the all of us Americans that the financial system will not fail. So they provide insurance, which the banks pay for, which you actually pay for that. And the reason we're going to cover this is because it insures deposits up to $250,000. Many of the strategies that we teach in Family Investor here you can earn a six-figure income. That means if your six figures is 100,000. So if you're earning a six-figure income, especially on an annual basis, like I said, $10,000 a month, that's six figures. That's $120,000 a year. You'll, in a couple of years, exceed $250,000 deposit. So we will get into that also in the banking basics a little further. And you can get pet coverage, which is like your own medical coverage. All right. And this one's marked deep dive life insurance because there's so much to talk about when it comes to life insurance. And one of the things about life insurance is that always raises a question with me is, it is defined as a way to protect yourself and your family from loss of income, but they don't require it. And we go into a little bit deeper in the deep dive to show you how you can use life insurance, not just for if you were to lose your life, but to live, to build retirement and other things. And there's different types. Like there's term life, which it's the least expensive, but they do 10-year contracts. So you could pay into something. It's like paying rent. You could pay into term life, and in 10 years, you get kicked out. It's like renting a house for 10 years, but now you have to move because we won't let you rent this. We won't cover you any longer under this term life. And they do that on purpose because that's how they calculate the costs and keep the cost down, because in 10 years, the odds are that you'll live. But, and I'm not saying it's a bad thing, we will show you how it works with permanent life. The permanent life programs are like whole life, and you may have heard of those. This is permanent, so it covers you for your entire life. You have a level premium, so you pay the same thing every month or every quarter or every year, depending on when your premiums due. You get a set amount of benefit and the cash values, and it earns interest. Life insurance policies earn interest. And same with universal life. This is the one I like. It's you covered, but it has a flexible premium, adjustable benefit, and cash value, and it earns interest. And the reason I like the universal life better than whole life is that one word here in the middle here, flexible. A lot of the key things to protecting assets and building wealth is you need to have flexibility, and we'll drive that into you in our deep dives. We really talk about flexibility because it's really important to the success of building wealth. Okay, and here we have variable and variable universal life. The key word here is a variable, and what that designates is, and we'll go over to the variable insurance, and you see the little asterisks. I will be doing that with advisors that are licensed to discuss these products, because by law, especially now that I'm licensed, I cannot give you advice on variable products. What I can talk about is my experience of what is compared to other types. And basically, it's more like an advanced investor's choice because of the choices you can make where your money is invested in. And this requires that an advisor has a Series 6 license or above, so they show the SEC that they are qualified to talk to you about this type of investment. Disability insurance. I mentioned this earlier. In case you become disabled, you will have a loss of income, If you do it at work, there's some workers' compensation, so that's the other type, but sometimes that's not enough. So we do a deep dive on disability insurance also, and we talk about where that could be necessary in case you lose your job due to an injury, and it's paid directly to you, and you can get that in addition to workman's comp insurance. And I'm not going to go into all the details, but you can't have like 6 disability insurance policies either, because they're not all going to they're going to come together and say, well, we're not all going to pay him $10,000 a month, because if you have 6 of those, that's 60,000. That's not replacing your income. So basically, that's it. But we're not going to go over workman's comp insurance, since it's different for every state, and you could get that information from your employer, and they should educate you on what the coverage is. And if you've ever had a workman's comp claim with your employer, you probably know a lot more than I do about workman's comp. Okay, let's get going here. Little typo up here, but deep dive business insurance. And there's business insurance. And the reason I talk about business insurance is you need to know that, because part of the strategies is to run your family or your life as a business, because there's a lot of advantages to that, but we won't get into that here. But there's health insurance that employers provide, workman's compensation, and if you decide to start your own business, you're going to need to know these things. You could get professional liability insurance, or known as errors and omissions, and property and casualty insurance. It's like homeowners insurance, but it's on the property that you're working on it. And home-based business insurance, if you're working out of your home, and also for commercial vehicles. Let's say you're a plumber and you have a fleet of vans. You have to insure those under the commercial type of insurance. And of course, there's other insurances like a disability insurance, but it's protecting your business from business interruption or loss of income. Let's say for a dentist or a doctor who's got a private practice. That's something that's very, very important, but it becomes part of the asset protection. Insurances are mainly an asset protection, and we're going to show you how to shift that over to protecting you, because right now most of the insurances you purchase are to protect the person lending you money. Going on with business insurance, you can also protect against the death of a key employee. Let's say you have a group where you have, let's say, a singer, and that's your key employee in your business, and something happens to that singer. There's your loss of your product right there. Also, when a partner wants to leave the firm, you could be buying out a partner after their family after their death, because a partner is part owner of that business, and you don't want their family becoming your new partner in place of the old partner, because they won't know how to run the business like the man or the woman who was your partner did. And of course, there's other ones: contingent liabilities, product liabilities, bonds. There's even forklift and other mobile equipment insurance that are more specific to those things because they're higher risk, they're dangerous, and so many more. And we'll get into those. But like I said, this is a basic training, and the reason I even talk about this is because it's important for you for us to plant those seeds to get you to start thinking about it. And here we are with our insurance thoughts. Why? Risk management and wealth preservation tool. Number 1. These should be numbered over here. I should have numbered these here, because this is a number 1. It's risk management and wealth preservation tool. It's a tool for you. It allows you and everybody else to insure against huge losses that can devastate a family. devastate a business, and they're reasonable rates. And we'll go deeper into the, because it's all about asset protection, wealth preservation, building wealth, and that's what these trainings are about, building wealth and preserving it. And we recommend you don't skip the other trainings, even though you got those little icons. Once again, I want to remind you, don't skip your other trainings. They're important. And once again, I want to thank you for bearing with me. Some of these topics are kind of boring, and it's real basic information. That's why it's the basic program. But I don't know what you don't know. So I'm going to cover as much as I can. And if there's something about the training that you don't understand, let us know. Write down the questions. I say this at the end of every training. Write down these questions in your notebook that you have, that you're using as your workbook. And once you get done with all the basic trainings, and including the go into the deep dive, and the questions aren't answered, email us at support@familyinvestor.net. We'll be happy to help you. We're here to make sure you do move on and you understand, so you can make better financial decisions. And when we get into the big picture trainings, where you're learning how to put all this together to build wealth according to your goals, you'll understand what we're talking about. So once again, I want to thank you so much for attending this training, and I'm excited about doing the next training with you. Thank you.